Wow, guys, another week went by so fast, right? And now we come to trade of the day, the highlights of this week's trades. Let's get into it, guys. Welcome to this week, where we bring you current news on everything finance, business, the markets, and investment funds. This week, hedge funds saw a rally in Q1. Hedge funds across the board reported gains in the first quarter of this year, with Citadel's flagship investment, the Wellington Fund, posting a 5.75% gain, according to a report by Reuters. Fixed income, on the other hand, found it challenging this quarter due to the Fed's increase in rates. As you can see, Citadel's Global Fixed Income Fund rose only 2%, underperforming the firm's other three funds. For those of you that don't know, Citadel is a hedge fund run by Ken Griffin, and they have $59 billion of assets under management. Let that sink in, guys. That's $59 billion. There's so much money out there, okay, and we can all get some. Also on this week, Vanguard's vote settled Disney's boardroom fight with two hedge funds, Triumph Partners and Blackwell's Capital. This battle was about keeping the current board of directors. Walt Disney's largest investor, Vanguard Group, voted to keep Disney's board of directors the same, allowing the company to pull further ahead. Vanguard, by the way, owns 8.2% stake in Disney. If you've never heard of Vanguard or what a Vanguard is or who Vanguard is, do your own research. They own the majority stake in a number of companies traded on the S&P, and they're part of the big three that run the world. But do your own research, okay? Welcome to Trade of the Day, a weekly series coming to you every Saturday on Am the Trader. We love to know where in the world you guys are watching or tuning in from, so post in the comments below where you're hearing from today. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets find consistency and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everyone on this planet should have access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Sounds scary every time I say it, but I know we can make it happen. Coming up this week, this is how you could have made 5% in the market, taking one trade a week, using one model, risking no more than 2% of your equity, looking for a 1 to 3 risk to reward. So we're always risking 2, looking to make six, okay? We had a total of 3 trades this week for a potential return of 12%. But remember, we're only looking for one trade to net us 5%. A reminder that this is not financial advice and that trading comes with real risk. But before we dive deep into this week's trades, let's talk about having a trading edge and what that entails. A trading edge is one of the 3 pillars every trader needs to have in their trading to survive and thrive in the financial markets. Confidence in your trading edge comes from 3 things. 1, it comes from understanding the market and how it operates. 2, having one trading model that has IPTA signatures. And 3, having a plan and process that you follow every single day. Successful trading, guys, is very boring. You're doing the same thing over and over again. Just like this information, you're hearing the same thing over and over and over again. You have to keep hearing it again until it sticks. This is the 3-step process I use to take trades weekly. Step 1, we have condition. This is based on the higher time frame directional bias. Then we have step 2, the stage. What sets up your trade? What does it look like? Then we have step 3, the execution. Have your entry criteria been met? Have you seen enough to get in this trade? The most important step is step 2, because once you understand where the market is going and you understand the setup, the entry is easy, guys. Also, if you understand price flows that occur around key highs and lows intraday, you'll have everything you need for a setup. All right, so we start with step 1, condition. Determine the higher time frame bias. This week, we were anticipating the weekly candle to expand higher. We've been bullish on index futures for a couple weeks now, so we're just sticking with the trend, okay? We're not trying to call the top, we're just riding the trend. As you can see from the higher time frame, down close candles are supporting price, and price is finding it easy to break highs. It spends little to no time below lows. These are all signs of bullish order flow. Then we come to step 2, the stage. What sets up your trade and what does it look like? First, we look at the economic calendar for the week. It tells us when to look for a setup. We look for medium to high impact news drive to narrow our focus. We stock set up on calendar days and after the news release. The optimal days and times to trade this week were on Monday, Tuesday, Wednesday, Thursday, and Friday. Bearing in mind this week was NFP week, me personally, I'm looking to be done trading Wednesday AM session for NFP week. Secondly, we look at what sets up the trade and what does it look like. This will be your model. Since we were expecting the weekly candle to predominantly expand higher, we went into the market hunting long formations, and this is our buy setup. Always we want to see liquidity taken below a kilo, displacement higher or the kilo probed. Displacement higher causes a market structure shift. We wait for a short-term low to form in a market structure below 0.25. Okay, guys, I always say 0.5, but really in my head I'm saying 0.25. The dash line, we'll always use the dash line as a reference in the pictures. Okay, so we're looking for a short-term low to form below 0.25, and then we're setting our limit order below the short-term low, stop loss below the swing low, and we're targeting the 1 to 3 always. Okay, that's our model. So let's see how it played out this week. April 1st, trade of the day breakdown. This trade netted us 0%. It was a break-even trade, and I'll get into it right now. So we had liquidity taken below a key low. Displacement higher causes a market structure shift. We're waiting for a short-term low to form in a market structure below 0.25 of the fib extension. I know last week I kept saying 0.5, but I meant 0.25. And for reference, it will always be the dash line. When you see the dash line, that's the 0.25 for reference, okay, for future references, because I know I'm going to mess up again. Anyway, the most important thing about trading is time and then price, okay? So setup formed prior to the launch sessions, but it didn't offer us an entry until 1:30 p.m. We're not really looking to trade during the launch session. My cutoff time is 12:10. I'll take a trade before 12:10, but after 12:10, I'm not really interested in getting into a trade unless it's like a A1 setup and everything just lines up perfectly, you know. So we're waiting for 1:30, which starts the PM session. And after when the PM session starts, we're waiting for a short-term low to form below 0.5. And then we're setting our limit order at that short-term low, okay? So when 1:30 started, we had the short-term low formed right here. So our limit order would have been below this low. Now, I'm not sure if it would have triggered just due to how tight this was, but if it did get triggered, would have been great. But your entry would have been right here. Stop loss below the swing low. We're targeting 1 to 3 always. We're looking to break even at minus 0.5, which is where we broke even, and then we were taken out at 6:06 a.m. So we were in this trade for 14 hours, 59 minutes. It didn't make us any money, but it also didn't lose us any money. It did meet the criteria for our model. April 2nd, trade of the day breakdown. This trade was a W, gave us plus 6%. We got in this trade at 12:08. Break even was at 12:49. We exited at 3:49 for a total of 3 hours and 41 minutes in this trade. 1 to 3. Our drawdown in this trade was 17 ticks. Let's get into it. Tuesday, April 2nd, we had news release coming out at 10 a.m. and 12:05. Like I say, we're waiting for the news to come out, and then we're anticipating a setup to form. We traded below kilo. Liquidity was taken below kilo. Displacement higher causes a market structure above the kilo, and it broke market structure above this kilo as well. So we're waiting for a short-term low to form in a market structure below 0.5. So you'd be waiting till after 12:05 when the news come out to see if the setup still offers you an entry. So time and price, remember. So the news release was 12:05. So we're waiting for a short-term low to form in a market structure below 0.25, and we're setting our limit order. So after the news, we had a short-term low here formed. The short-term low after 12 o'clock formed before the news. It was triggered after the news right here. Stop loss below swing low, targeting a 1 to 3, breaking even at zero point 0.5. So we would break even at 12.49 right here. Would have been risk free at 12.49, targeting a 1 to 3, which was hit at 3.49. So you would have got your 6% in this trade, and you would have been done trading. 5th trade of the day. Let's break it down, guys. So Friday NFP week, we're looking for the news to come out, and then we're looking for a setup. Okay, as you can see, we had liquidity taken below this kilo, displacement higher. It can be probed. It could have probed this one and then displaced higher, but there was another liquidity it took. Okay, so liquidity taken below kilo, displacement higher causes a market structure shift. We're waiting for a short-term low to form in a market structure below 0.25. Okay, below 0.25. Keyword of this week is time. Okay, time and then price. So we're waiting for 9:30, which kicks off our AM session, which that's when we start looking for to get into the market. So our setup was formed prior to 9:30, so we're waiting till 9:30 to see if it offers up a chance to get in. Okay, so 9:30 opens, we have a short-term low that's created below 0.25. We also had this short-term low as well, but I would have placed it to the closest one. All right, so entry limit order would have went right here. Stop loss below the swing low, targeting a 1 to 3. We broke even at 9.54. So we got in this trade at 9.37, broke even at 9.54. We exited the trade at 11.45 for a total of 2 hours 8 minutes in this trade, for another 6% for the week. Okay, so NFP, we don't really trade during NFP weeks. We don't really trade Thursday and Fridays, but as you can see, the model does offer you a setup and is post NFP news. Okay, so that was it for Friday. All right, guys, this week we've showed you 3 opportunities that could have netted you at least 5%. With 2% risk, if you've taken all 3 of these trades, you're looking at 12% for the week. Remember what the hedge funds are returning. But remember, like I always say, we're only looking for one trade that will net us 5% for the week, and we're done trading. If you found value in this information, then make sure to subscribe and turn on post notifications if you haven't already. This skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you for watching and tuning in to Trade of the Day. See you all next Saturday, same time, same place. Happy hunting.